Good morning. This is Horizon's Middle East and Africa. Our top stories this morning. Asian stocks rise to a record while Treasuries slide as traders trim bets for a Fed rate cut following a stronger than expected U.S. jobs report. U.S. President Donald Trump says he told Benjamin Netanyahu he plans to press ahead with Iran talks despite the Israeli PM's reservations. And we speak to Thomas Pramotedham, the CEO of Presight, as the company reports full-year revenue that beats average estimates. It's just gone 9 a.m. across the Emirates. I'm Jumana Bersachi in Dubai. Well, the earnings season is coming through thick and fast, but the focus for markets yesterday was indeed that jobs report. It was delayed, of course, because of the shutdown. Headline figures surprising to the upsides, coming in at 130,000 versus 65,000 expectations. A bit of an upswing in healthcare and construction. Also some updates to the BLS birth-death model. So you could say that part of the upside surprise was due to seasonals and perhaps tweaks in the underlying mechanism. The net result, though, was the S&P actually ended the day flat, but belies a lot of rotation that was going on underneath. We saw a good day for energy, not such a good day for real estate. This morning, the handover from Asia Pacific, quite positive, up 0.5%. Our colleagues in Asia have been talking a lot about the price action and the Kospi reaching an all-time record high, driven by performance in those chip makers. We'll talk more about that shortly. S&P futures just shy of 7,000, up 0.3%. Attention now focused on the CPI print that's coming through tomorrow. So that's another big macro event for the U.S. markets this week. The USD essentially unchanged. And after we got that stronger than expected print, we attempted to rally a little bit in the dollar, but we went back to what we always do, which is eventually slipped. And we saw a lot of people sort of selling into that dollar strength, especially those who had the dollar-yen trade on and were looking for a way to get out. I remember many people had that trade on going into the Japan elections over the course of the weekend. And then Brent, take a look. We're still just shy of $70 here, up about 0.4% today. I would say not a lot came out of the meeting between President Trump and Israeli Prime Minister Netanyahu, and intend to continue with the negotiations from the U.S. side. But again, a heightened sense of alert right now in the region vis-a-vis what might happen in Iran. And let's switch over. After the non-farm payrolls print came out, I just want to point out that we did see a re-rating of rate expectations, a repricing, I should say, of rate expectations for 2026. Going into the event, we had about 58 basis points worth of cuts priced in, and now it's moved up to around 53. So basically 25 basis point rate cuts priced in, mostly for the second half of 2026. Okay, let's talk more about the price action in Asia. Min Min Lo is in Hong Kong for us. Min Min, walk us through it.
Hey, Jumana, it's been a phenomenal year for Asian stocks. We're not even 2 months into the year, but the Asia Pacific benchmark is already up 13%. And here you can see up by 0.5% today, reaching another record high. And it seems like there continues to be this rotation away from U.S. assets, given the volatility in the U.S. dollar, the uncertainty around the Fed rate cut trajectory as well. And the Kospi has been leaving everybody else in the dust, right? Up by 2.3% today. Again, it's the semiconductor names, the Samsung, SK Hynix, the darlings here, especially after Micron overnight in the U.S. rallied as well after the company said it's shipping its HBM chips to customers earlier than expected. The company also saying that it expects to see supply tightness continuing through and beyond 2026. So that's been positive for some of these tech stocks in Korea. But flip the wall, we take a look at China, and there's some AI disruptions going on over there as well. Zhipu up by 30%. This is a company that has launched the latest large language models. It upgraded the flagship version that it has today, and it's now charging 30% higher for its latest model with double the amount of parameters compared to the previous model. It has benchmarked itself against Anthropic, which we know in the U.S. has led to that tech sell-off, software sell-off in the U.S. Certainly, this company is trying to front-run the highly anticipated launch of potentially new upgrade of DeepSeek's model post-Lunar New Year. So the stock is up here. This is also, by the way, a top pick for JP Morgan as well. NetEase, though, sliding after the earnings yesterday disappointed, missed expectations, and again, concerns around Google's Genie app. That's a gaming AI tool that allows gamers to contribute to the building of the gaming world. So AI, again, disrupting some of these gaming stocks as well.
Maimin, thank you so much. I also want to pick up on one thing you said. It had actually, I knew that Asian stocks had been doing so well, but I did not realize that the MSCI Asia Pacific was up 13% year to date. And just for viewers, for comparison's sake, S&P is up 1.4% year to date. The Euro Stoxx 50 is up 4.2%. So just to give you some context there. Thank you, Maimin. Well, for more market insights, Patrick Armstrong, Chief Investment Officer at Plurimi Wealth, is with us. Well, we'll talk about some of the price action in Asia, but first I want to go back to yesterday's jobs print. Not what the rate cutting brigade wanted to see, is it?
I don't know if it doesn't change anyone's opinion too much. You looked at 5 basis points moved in the cuts for the year. So I do think it's going to come down to Warsh. I think he's credible enough to mold the sentiment and get the governors voting aligned with him. And there's no way Trump is nominating him without the promise of rate cuts.
Why are there still 2 rate cuts priced into the U.S. curve here? I mean, if you look at on the surface, the U.S. economy doesn't look like it needs rate cuts.
We don't think it does. I think Powell would sit on his hands at this point, say we've got a bit of a disinflationary trend, but employment is very strong. Wage growth 3.7%. That drives consumption. You're also going to get fiscal stimulus coming as well. You're going to get the tax rebates coming through, the potential tariff dividend that Trump's talked about in the summer to get everything hot for the midterms. So Warsh is going to have to create a narrative almost around productivity gains from AI, and that's the disinflationary trend that he wants to get ahead of. I don't think they're needed, but I think they're coming.
Okay, so one thing that we do know about Warsh is he's an advocate of a smaller balance sheet for the Fed. And I just wonder, in an environment where there's been such a massive U.S. buildup of debt and a huge wave of refinancing to come, especially in short-dated U.S. Treasuries and in T-bills, whether you can actually succeed with the policy of perhaps undergoing quantitative tightening or reducing the size of the balance sheet without causing significant financial instability?
I expect that's his agenda, and that's what will give him credibility with the cuts that he'll want to put into place, because outright cuts with no quantitative tightening is extremely dovish. And when you've got inflation above the Fed's target, you've got very low unemployment, below the NAVU, it's hard to cut rates unless you're doing some quantitative tightening on the other side of things. So I expect a much steeper yield curve. I do think duration gets punished in the coming year, where bonds and no earnings equities, those are the things that suffer if you do have quantitative tightening, but you still get the boost, a bit of a sugar rush from rates that get probably too stimulative at the front end. Okay,
let's talk about respective valuations in these stock market indices. I mean, just talking about the price action in Asia this year has been a very strong start to the year, but equally, you look at the PE ratios for many of these indices and they're trading at a discount to the U.S. Do you expect this outperformance to continue?
I do. We're 17% underweight the U.S. in our world equity strategy. So that means we still have more than half of our equities in the U.S., which seems like a lot. But versus the cap-weighted benchmark, which is 70%, we're at 52, 53%. We've just added Samsung at the beginning of this month, and that's an Asian stock that trades at 8 times earnings, believe it or not. It's up 200 or 300% over the last 12 months.
It's pretty incredible. Minmin was just talking us through the price action there. So SK Hynix, Samsung, a lot of those chips that actually produce the memory chips that are now intrinsic, as we know, to the AI rollout. But the thing is, I mean, how do you, when you look at this, I mean, it's easy for me to say that memory chips are doing well, but at what point are you going to reach fair value? How do you even discount future growth in this space?
It's something you don't want to be there at the end, but right now the pricing power is incredible. That Micron, SK Hynix, Samsung have sold everything they can produce through 2026, and there's just more demand than what they... And you've got an oligopoly at the end. So basically, SK Hynix is 60%, Samsung's 20%, Micron's 20% of the market. Things like this that have supply, demand, and then oversupply, that's always the risk with these things. But because you do have an oligopoly position, I suspect they manage it pretty well, whereas shipping and things like that, where you get huge earnings power and then it totally disappears, it's harder to do. So I do think that oligopoly position and the hyperscalers adding debt. Google's got so much free cash flow, but it's raising billions of dollars of debt because of a real commitment to this AI data center spends. And we have years ahead of us.
At the same time, all of the bonds issuance in the market has been extremely well received.
Yeah.
Starting with the Oracle, Alphabet recently, they're massively oversubscribed. So
they are.
It feels as though, the narrative around how these hyperscalers are going to fund their investments is a bit overblown.
I'm not sure if it is. We own Alphabet, and it's funding most of its spend through operation in equities.
Yeah.
Yep, not in the bonds. I wouldn't have any issue with the bonds. The 100-year bond, I don't know if I would go for, but we're short Oracle on the equity side of things. It really is reliant on debt-fueled capex, and if I'm right on the yield curve, companies that rely on debt to fuel their spending are really going to face headwinds. Alphabet's got an incumbent client base. Oracle's trying to disrupt and get into that client base and using debt to do it. So I just think Alphabet's path is much clearer than Oracle's. Alphabet's adding some debt, but it's at the margins, whereas Oracle's heavily indebted.
Yeah. So you've got to make that distinction. Balance sheet. At the end of the day, it matters. Patrick, thank you so much. Patrick Armstrong, CIO of Plurimi Wealth. Now for a look at some of the other stories we're following. The Republican-led U.S. House has passed legislation aimed at ending President Trump's tariffs on Canada. The move signals growing anxiety over the White House economic agenda ahead of midterm elections that are expected to focus heavily on affordability. Trump is almost certain to veto any bill calling for a repeal of his tariff agenda. And the Fed is said to have signaled to lenders that it plans to abandon some prior warnings about improving operations. Sources say the remaining flags will focus more on immediate risks to a bank's financial health and less on processes and procedures. Bankers have argued that Fed supervision has become too complex and expensive. Morgan Stanley boosted CEO Ted Pick's pay last year to $45 million. 3/4 of his bonus will be deferred over 3 years, with the entire incentive to be awarded through equity. The Wall Street Bank posted its strongest year in 2025, with earnings per share hitting a record. And coming up, we speak to the CEO of Presight as it reports full-year earnings. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jumana Bersachi in Dubai. Presight has reported full-year revenue that beat the average estimate, coming in at just over 3 billion dirhams. Joining us now is Thomas Prabhatedham, CEO of Presight. Thomas, it's always good to chat to you. And now we have the numbers for the full year for 2025. 36.9% revenue growth. That's quite a juicy figure. Can we expect the same in 2026?
Well, we come off very strong momentum the last time we were here. And in fact, this is the 12th consecutive growth quarters. So if I had what history would show, I pray and inshallah it will be the same. But it's really driven by the high adoption of AI technology across, not just in the UAE, but in the region. This year we've seen international revenues grow 130% year on year, accounting to almost 39% of total revenue.
So I was going to ask you about that. It really feels like your international book is growing. How do you keep up that momentum in your international markets? And which have been the strongest growing international markets?
Yeah, well, if you look at it, we started our regional headquarters in Central Asia. We spoke about it the last time. We have now opened out Albania as a new smart city project that we're undertaking. So the Balkans region is open. But fundamentally, we're standing on the platform of where UAE is going. So UAE's vision of AI adoption and being one enabler of the emerging growth market has set the stage for Presight to be able to extend that. A lot of the AI and a lot of the applied AI solutions we've done across smart city, energy, government services are tested at scale in Abu Dhabi, in the UAE. For instance, when we're in Davos, we launched the General Secretary's Cabinet legislative framework on a completely AI native platform. So these are the platforms that will be tested at scale in the UAE and then shared and exported out.
So what is the backlog look like? And I just wonder, how investors should be thinking about revenue conversion at a time where you have shakeouts like the one that you had last week, where many industries that are tangential to AI are also getting disrupted by these latest advances in models. Is that a risk?
Well, if you look at our backlog growth, we grew backlog 12%. Backlog ending FY 2025 at 3.4 billion. If you look at the our backlog has always contributed to excess of 50% of forward revenue.
Right.
So that backlog, that growth, continues to give us visibility down the line. Of course, you expect shakeups as the technology is evolving so quickly. I think Presight dominantly focus on sovereign AI and AI infrastructure, and we have the focus of the emerging markets. So as the UAE continue to grow in adoption, you heard about the digital embassies project that G42 has put in place. Alongside with the whole ecosystem, we're now able to bring AI application at scale from UAE to serve the region around us. And I think these are the moat that puts us, very solely in how agentic AI is going, how adoption of applied intelligence is moving towards.
In the region, though, we're seeing more competition from the likes of Google, Palantir. How do you navigate the more competitive landscape? Obviously, the whole world is looking at the UAE now and the region for opportunities.
I think the strength of it, as the Gulf and the UAE especially being the leader, has now demonstrated not just the application of AI, but the adoption of it. So the AI native government strategy has definitely drawn competition in.
Yeah.
Presight being part of the G42 ecosystem, being the Emirati net largest exporter, being a Abu Dhabi listed company, we continue to serve where sovereign AI and sovereign AI infrastructure is needed. You would see enterprise AI companies coming in to support the greater ecosystem. But we know where we focus on. We focus on the federal work that we're doing with the federal government, the Emirates work that we're doing in Abu Dhabi and Dubai, as well as the sovereign work that we're doing outside in the region.
Yeah, let me ask you about AIQ. I see also it was a big driver of growth this year as well.
Yes.
Talk us through why that was the case, and presumably there's new product offerings that go along with that.
Well, you have been at EDIPAC and you met the AIQ team.
Yeah.
Energy continues to be a big part of the AI equation where we're going. So what AIQ is doing, using AI to optimize work in upstream, downstream, introducing not just AI language models, which is what we've done with Energy AI, but robotics to do that. Energy continue to contribute about 30% to Presight's revenue, and that's a strong driver. But similarly, last year we doubled down on finance. So towards the end of the year, we announced our deals with FAB, with HSBC, and we finalized the joint venture with the UAE Central Bank. Now, Presight has become the digital transformation partner for the UAE Central Bank across all digital infrastructure transformation initiatives, from the central bank digital currency to cross-border payments, and what future of digital finance will look like. So we see energy being a strong driver, continue, and we see finance to come up very strong.
Yeah, I think you mentioned HSBC there. Why are you going down the path of these partnerships with financial institutions?
Well, I think a big part of it, digital finance is going to change. Right? And the banks themselves can adopt AI in multiple ways. So where we land our strength is in growth intelligence, is in risk and compliance, and it's really understanding the profile. So with HSBC, we've announced AI, agentic AI, to help wealth management profiling, to get that perfect brief in the morning of how a relationship manager to approach the clients. And imagine now a relationship manager, which you need to have that interpersonal relationship, has an army of agentic analysts to really get down to the essence of what would make their clients be interested in.
I have a tip for them. Maybe they can just watch Bloomberg television in the morning.
Absolutely.
When they come in, they get everything they need to know from Horizons.
Absolutely.
Thomas, always good to chat to you. Thank you so much. Thomas Pramotedham, CEO of Presight. Well, coming up, Trump's energy chief says the U.S. can help drive a dramatic increase in Venezuela's oil, gas, and electricity output this year. We'll have the story next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Joanna Bersachi in Dubai. U.S. Energy Secretary Chris Wright says Washington can help Venezuela raise its oil, gas, and electricity output this year. Bloomberg's Anne-Marie Hordern reports from Caracas on Wright's visit and the challenges U.S. firms face returning to Venezuela.
It's an historic moment for Venezuela. The highest-ranking U.S. official is visiting the country, the first time we've seen this since the capturing of Nicolas Maduro. This is a country where the U.S. closed its embassy in 2019, and today we saw a cabinet official standing outside the palace in front of an American flag. Secretary Chris Wright of the Energy Department met with Acting President Delcy Rodriguez. The two discussed business ventures and how to collaborate further when it comes to energy, mining, and electricity in the country. Secretary Wright said he came here with a message from President Trump, was that he wants to make the Americas great again, and he wants to transform this relationship. He continuously talks about you can transform a relationship with commerce instead of boots on the ground. I'm Amber Herdern in Caracas, Venezuela, and this is Bloomberg.
Now for a look at some of the other stories we're following. Saudi Aramco has sold its first oil cargo from its Jafurah project, marking the first reported export from the $100 billion development. The shipment is condensate, a light oil found alongside natural gas, and will be delivered to buyers in Asia in the coming weeks. Jafurah is Aramco's first unconventional field and is expected to significantly boost the kingdom's natural gas output by the end of the decade. Richard Atias and Associates, the organizer of Saudi Arabia's FII summit, has tapped a roster of banks to work on its planned initial public offering. Bloomberg has learned that the firm is working with Citigroup and SNB Capital on the potential share sale, which could value the business at up to $1 billion and take place as early as this year. Founded Richard Atias and Saudi wealth fund arm Sanabel are considering selling part of their stakes as part of the listing. ADNOC's shipping arm plans to order as many as 6 new LNG tankers as the company accelerates its push into global gas trading. The vessels would add to 14 carriers already contracted to serve export projects in the UAE. The move is aimed at giving ADNOC greater flexibility to market cargoes internationally as it builds out its global gas portfolio. British International Investment has halted investments with DP World over alleged ties between the company's CEO and Jeffrey Epstein. The UK government-owned institution says it is shocked by the allegations and will not make new investments until required actions have been taken by the company. It follows a similar move by Canadian pension fund CDPQ, which also paused future investment plans with DP World. And let's get back to markets. It was a big day with that jobs figure coming through much higher than expectations. The net result, though, by the end of the day is the S&P was essentially flat, but a lot of rotation going on under the surface. We saw a strong day for energy, not a good day once again for software stocks yesterday with the price action. Today, things are slightly more positive and upbeat. S&P futures up 0.3, the Nasdaq up about 0.2. European markets, take a look at that, pointed to open up substantially up in the green today, up 0.7%. So the handover from Asia also pretty positive as well, as we were just talking about earlier. Huge outperformance in some of the chip makers. The Kospi has been an outperformer this year. Memory stocks, as we were speaking about with our earlier guests, also on an absolute tear for 2026. But coming up, we're going to talk more about geopolitics. U.S. President Donald Trump tells Israeli Prime Minister Benjamin Netanyahu he prefers to make a deal with Iran. We discuss the latest with Julia Roknifard, senior lecturer at Taylor's University. Good morning. This is Horizon's Middle East and Africa. Our top stories this morning. Asian stocks rise to a record while Treasuries slide as traders trim bets for a Fed rate cut following a stronger than expected U.S. jobs report. U.S. President Donald Trump says he told Benjamin Netanyahu he plans to press ahead with Iran talks despite the Israeli PM's reservations. Plus, Johannesburg has set up a special task force to tackle a worsening water crisis. That is as shortages spark protests across parts of the city. Well, it's just gone 9:30 a.m. across the Emirates. I'm Jumana Bersachi in Dubai. Let's talk more about the price action yesterday and what has happened overnight, because we got that, delayed jobs report. The headline figure, much better than expected, 130,000 versus 65,000 jobs created, which is what was expected. A big boost coming from construction and from healthcare, though people are saying that that's largely on back of seasonals. Unlikely we continue to see those gains. Plus, a slight tweak to the BLS birth-death model. The reason I bring this up is the number may look like a bit of an anomaly, and the average growth rate is probably closer to around 40 to 50,000 jobs per month that's being created. So this 130,000 figure is unlikely to be the new trend rate. But just going to park that there, because by the end of the day, what you did get was a repricing of some sorts of interest rate cuts in the front end of the curve, about 50 basis points priced in now. And you also saw the S&P end the day flattish with some rotation go on. We saw energy stocks do really well yesterday. And of course, we are seeing Brent, as you can see, just creep upwards south of $70 here versus the performance in real estate, which got battered on two fronts. Number one, the rollout of further AI models, which again is disrupting some of the businesses there, in addition to the higher interest rates repricing in the front end. So that didn't help real estate stocks. Today, handover from Asia Pacific, pretty positive, up 0.6%. A reminder of what Min Min Lo was saying earlier on in the show. The performance of the MSCI Asia Pacific Index this year has been remarkable. It is up 13% year to date. So the best performing region by far geographically this year. S&P futures up 0.3%, leaning towards green. The USD trading sideways. We tried to rally a bit yesterday. That was sold into by the market. So clearly, this what our Markets Live team are calling quiet quitting trend of the USD is continuing. And then Brent, I just spoke about it, around $70. We're going to talk about geopols in a second. Switching over, this is what the rates market is pricing in to the curve for 2026. It is basically around 50 basis points worth of cuts, or about 225 basis points rate cuts. Fed cut pricing for 2026 has been pulled back. Okay, let's continue the conversation with how these markets in Asia are faring. Another positive handover. Min Min Lo will walk us through it.
Hey, Jomana, yes, it's been an excellent session for Asia-Pacific stocks here. There has been a lot of focus on the Korean tech stocks, but here we're taking a look at Japanese stocks as well. There's been huge moves in the bond market, particularly the higher end, the longer end of JGBs. We are seeing yields at one point down as much as 10 basis points. It's pared back a little bit now, but it shows you that there seems to be renewed confidence in Japanese bonds, especially after Takaichi reassured that she's going to take a more pragmatic approach when it comes to fiscal stimulus, and perhaps also reflecting a revision in terms of expectations when it comes to the pace of rate hikes from the BOJ, given the statements we've been hearing from the Finance Ministry, from the BOJ so far. And you take a look at the topics, and the Nikkei are gaining despite the yen gaining against the US dollar. Again, another signal of the collapse in that correlation between a weaker yen and the stronger stock market. So interesting to keep monitoring this trend. We're also taking a look at the Chinese markets because, yes, there has been a lot of focus on the darlings and the SK Hynix and Samsungs, but I gotta tell you about this Chinese stock, Zhipu, absolutely flying today, up by 37%. It seems like every time I'm checking that stock, it's gone up a few percentage points again. And you can see here, it's just debuted in Hong Kong just about a month ago, and it's absolutely on a tear, outperforming the other big tech names like Alibaba, Tencent, and the like. It's just launched the latest iteration of its large language model with double the parameters of the previous model. It's benchmarked itself against Anthropic and also front-running itself against the anticipated upgrade of the DeepSeek model that's expected to come in the Lunar New Year. So certainly want to see how it stacks up against that. But JP Morgan has named Zhipu as one of their top picks in the Chinese AI space.
Wow. Okay, Zhipu, that is the name to remember for anyone who's watching this show. If you want to keep track on all of the AI models, the huge advances that are coming, take a look at the performance of that stock. Pretty remarkable. Min Min, thank you so much. Min Min Lo in Hong Kong. Well, to geopolitics now. U.S. President Donald Trump says he told Israeli Prime Minister Benjamin Netanyahu he intends to press ahead on talks with Iran. In a Truth Social post, Trump says nothing definitive has been reached during their meeting in Washington, but he insists that his preference is to reach a deal with Tehran. Netanyahu visited Washington to warn Trump against a narrow agreement with Iran, but his office says the two leaders agreed to continue coordinating closely. Joining us now is Julia Roknifard, Senior Lecturer, School of Law and Governance at Taylor's University in Malaysia. Well, we were talking about this sort of hastily arranged trip that the Israeli Prime Minister put together to go and visit President Trump face-to-face. Is it your expectation that as a result of this meeting, he might have influenced the path of negotiations or discussions that the U.S. is currently engaging in right now with Iran?
Indeed, there is no publicly announced result, and Trump says that no definitive result, no definitive outcome of the meeting. However, by the looks of it, Netanyahu went to try and pressure Trump to lean on Israel's maximalist demands, which with the Gaza threat, with the Gaza situation being a little bit mitigated at this point, he turns his side to Iran, which has been for him, for his government, an existential threat for a long time. So whatever could be done to mitigate this threat, he would like to go for it and persuade Trump to help Israel out on this. There is a little bit of a difficult situation where the two probably were scheming on behind the closed doors for the 3 hours that the meeting lasted. And that is how to conduct this operation on potentially weakening Iran, possibly exerting a military attack against it, but leaving Israel unharmed, because Iran has already stated that it is going to reply back with everything that it has got.
Yeah.
It has declared that it's not ready to continue in this permanent state of war between Iran and Israel.
Yeah. So let me ask you a question, Julia. Do you believe that the Trump administration actually wants to secure a deal with Iran, or is this a time-buying exercise?
It looks like a time-buying exercise to explain why the action is not taken right now. And Trump already put himself in a difficult situation when he said that the help is coming when Iran was suppressing the latest round of protests, which subsided to this point. So I think there are a lot of questions were asked there why there was no action taken, including from within Iran, from some parts of the Iran opposition and Iran protesters who expected this military strike against Iran, and those who welcomed even the 12-day war. So now it looks like an attempt to tell Netanyahu and to tell all those who are asking these questions that, okay, let's see if we can try weaken Iran by other means, if we can get it to the table and to give up its missile capabilities, which Iran said it's a red line for it. And then probably there will be no need to engage in this costly military operation with unknown result, and trying to probably also to keep Netanyahu at bay and not attack Iran on his own at the moment.
I mean, the thing is, at the beginning of the year, because of what happened in Venezuela and the ousting of Maduro, I think people were quick to extrapolate that maybe you could see something like regime change, or at least the removal of the supreme leader in Iran. Is that just off the table now, or do you still think that that is what the U.S. might be angling for? And certainly we know that Israeli Prime Minister is angling for that.
Netanyahu would definitely like to have it, but if it's not possible to have it, then there are means over which there are conditions over which the U.S. is pressuring Iran in the negotiations. There are three: the missile capabilities, the nuclear capabilities, and the networks of influence in the region. For Trump, for the U.S., of course, there are those in the political establishment who would like to see the regime change, but I think Trump largely doesn't care as long as Iran remains in this weakened position, and that's why he wouldn't like to engage in a costly operation. And we can see there are indeed no calls for action from him over the protests, over the situation of the regime change. And the negotiations they're having are on a different sort of issues, on nuclear capabilities, on missile capabilities, as I already mentioned. So for Netanyahu, he would definitely like to have it, but and to probably have Islamic Republic replaced with the Shah, the son of the late Shah of Iran, Reza Pahlavi, which would be pro-Israeli and pro-American. But if not possible, then there are other means to be deployed, and he's definitely trying to put this in action, and that's why we're seeing these meetings.
Okay, one thing I want to round up the discussion with is just before he had his meeting with President Trump, Netanyahu signed on to the Board of Peace. How significant a step is that, do you think?
That was already expected, so nothing significant about that, especially if we see the whole Board of Peace with the European countries not willing to join. And I think Trump counted on them pretty much as a legitimizing step for the whole Board of Peace. And Netanyahu joining it, I think it just reinforces the perception of that the whole Board of Peace is a mockery without any sort of democratic oversight, where President Trump is there for life, and the Board of Peace itself not even mentioning Gaza and trying to expand its capacity to other issues and perspective. So it's not unexpected, but I don't think or don't see how it's going to take off from now onwards, lacking the support of the other nations that Trump counted on.
Julia, thanks so much for coming on our show today. Julia Roknifard, Senior Lecturer, School of Law and Governance at Taylor's University, Malaysia. Now, coming up, we speak to the CEO of Bahraini investment company, GFH Financial, as the firm reports full-year earnings. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jumana Bersachi in Dubai. GFH Financial Group has reported full-year gross profit of just over $719 million, which is a jump of 8.1% year-on-year. The Bahrain-based investment firm has also seen a jump in net profit attributable to shareholders of more than 18%. Joining us now is Hisham Alrayes, Group CEO of GFH Financial Group. Really good to have you with us, sir. Thank you so much for joining our show today. Let's talk about those numbers. Annual net profit to shareholders up 18% for the year. What are the main drivers for this growth?
Good morning. Thank you for having me on your show. We have been focusing to grow our AUMs and a lot of focus on to benefit from the volatility in the markets by also undertaking certain positions in our treasury and our broad book. A lot of focus on digitization and growing the size of our client base through our new app and digital banking. And I think that has contributed very well to our profitability.
And in terms of strategic priorities, I know you have a very well-diversified portfolio of businesses, of investments in logistics, healthcare, education, tech sectors. It's also well-diversified across different regions, MENA region, Europe, the U.S. as well. What would you say are your strategic priorities for 2026?
We would like, as a bank, to continue to work with our key participating subsidiaries as an asset manager and third-party asset managers to provide access to our client base. I think GFH has very specialty by focusing on high net worth individuals, and maybe one of the best in the region to focus on that segment, where we bring to them regional opportunities, at the same time access to the best asset managers and defensive wealth preservation investments in the States. Therefore, to grow the business, we continue to acquire a specialized asset manager that can add experience to the group and to provide a low-risk, secured return for our clients.
Yeah. Earlier at the top, you were talking about the focus on digitization, the growing size of the client base through the app as well. You've strengthened your digital infrastructure through that Temenos core banking system. How are you balancing investing in a digital future versus shareholder returns here?
Yes, so the wealth management has always been a one-to-one nature of, the relationship. So you have to fly, to go to set, to build the relationship over a period of time. And this has always restricted the wealth management products to very specific segments in the market. through converting the bank and using our also part of our commercial banking expertise and applying the AI, I think we have been able to penetrate into the affluent segment and to access markets. Now, you can onboard a client in minutes. They can transfer, take a position in a portfolio or a fund, or make a transfer instantly. And that gives a lot of comfort, especially that we have seen through generations from the grandfather to the father. Now the son prefers to deal through digital and through app and take their own decisions. And that, I think, has helped to grow our client base by 15% last year. And most of the onboarding now, we see them coming through digital platform, yes.
Interesting. Okay, super interesting. I want to ask you a question also about the IPO outlook for the region, because we're seeing a cooling of some sorts. How do you see deal flow transpiring this year?
There is a great push from the various markets into the IPO. You will see there is different valuations and attractiveness for each market. I see Kuwait has participated significantly into readjusting also GFH market capitalization by us focusing to attract strategic shareholders there. Kuwait is very attractive for IPO due to the valuations. Saudi Arabia, of course, is the largest market and has a deeper liquidity, yet has suffered over the last 1 year or so from valuation. It continues to be a very attractive market, and I think market should adjust over the coming period of time. Bahrain, we have seen that they have announced a number of strategic initiatives at the Bahrain bourse to push companies and to make it very attractive for various companies listing. Dubai remain to be very attractive, and Abu Dhabi as well. And us as GFH being cross-listed into 4 markets, I think we benefit a lot from that and from the arbitrage and valuations. In our portfolio, we are working to list our Helion healthcare platform in Saudi Arabia. The healthcare valuation, despite the adjustments of the valuation in Saudi Arabia, has remained very, very attractive and a premium from the market. And we plan to have our healthcare platform listed, inshallah, in Saudi Arabia over the next coming 12 to 18 months. Education also remain very attractive in Saudi Arabia and Dubai. And this is also another priority that we work on.
Thank you. Thank you for the visibility on your own business and some of the deal flow we can expect there. Really good to chat to you. Hisham Alrayes, Group CEO of GFH Financial Group. Well, coming up, Johannesburg scrambles to contain a deepening water crisis. We'll bring you that story next. This is Bloomberg. Johannesburg has set up a special task force to tackle a worsening water crisis as shortages spark protests across parts of the city. Officials say the task force will bring local authorities and national representatives to coordinate technical responses and implement demand management measures. Our Chief Africa correspondent, Jennifer Zabazaja, joins us from Johannesburg. So, first of all, just talk us through how severe this water crisis in Johannesburg is right now.
Yeah, Jumana, it's quite severe. If you take a look at what we've seen over the past few years, water shortages have been an issue in many rural parts of the country and townships for decades. But these protests, as you were just alluding to there in the intro, have really intensified. Public backlash has intensified as we've seen these shortages moving into some of the urban areas. And I'm talking about here in Johannesburg, where I am, which is Africa's richest city, home to about 4.8 million people. But we're also seeing some issues occurring in the capital of Pretoria, and even tourism favorite in Cape Town amid some of these high summer temperatures. Now, when we talk to officials, they point to some issues with the reservoirs, crumbling infrastructure, which is what we've heard time and time again with some of the infrastructure in the city, as well as poor maintenance over the past few years. And in some parts of the country, they've even some people have even been asked to ration water. Now, the big question that many people are asking, and not just on a human level, when will they have water, but also when we speak to investors, is that what will this mean for an economy that many analysts say is finally stabilizing after years of crippled growth because of some of the electricity outages that we had been reporting on for quite some time. We actually recently spoke to a Standard Bank chief economist who told us that South Africa's economy has actually entered into its strongest phase in 10 years. And yet we're hearing that Johannesburg Water says it needs to spend about $2 billion over the next decade to address the crisis of water. And so will this potentially be a hindrance to any sort of stabilization here?
And Jen, is the city actually equipped to handle what needs to be done to resolve this?
Well, the coming together of this task force is somewhat of an acknowledgement that handling this on a municipal level is not going to work. So what we know about this task force really quickly, Jumana, is that it's going to be Rand Water, the Gauteng provincial government, as well as the South African national representatives that are going to be working together. But also significant to point to the fact that the government is not just focusing in on South Africa. We're also reporting about initiatives that are taking place outside of the country to bring more water into South Africa, considering how much of an issue this is.
This actually is, yeah. Jen, thank you so much for bringing us that story. Jennifer Sabazaj, our Chief Africa Correspondent in Johannesburg. And that's it for our show, Horizons Middle East and Africa. I'm Jumana Versace in Dubai.